Traders are getting into position as the Fed meets today. Let's bring in pro trader Michele Schneider, Director of Trading at the MarketGauge Group. Good to see you there, Michele. And what do you think the Fed is likely to announce on Wednesday? What's your prediction also on stock market reaction?
Well, what's been so interesting about this market is that besides price and momentum, which always, of course, is the things that we watch, market psychology has been a huge player. And to see the skittishness ahead of the Fed makes a lot of sense in the psychology. So what I've been trying to do is think, what might be the psychology shifts based on what the Fed decides to do? So I have a theory, which of course is only a theory until we see it prove out. The consensus is 75 basis points. And if that's the case, we still have 2 meetings left this year, in which case I think initially you might see a little bit of a relief because there's fear on the 1-point raise. But then I actually think the market could go back down into skittishness again and possibly go back to test these lows that we keep seeing over and over and over again getting tested, which is around that 390 level in the SPX. But if they go to a full basis point, I think that initially we'll see a sell-off, but then the market psychology may change to they're not going to get much more aggressive than that, at least not for the rest of the year. We have midterm elections and then the season's coming up. They don't want to completely kill the retail market ahead of the holidays. So that's kind of what I'm looking for is 1% psychology means initial flush and then people come in and buy, or 75 basis points, we may get an initial rally and then I think things will start to settle down. Longer view, though, is still kind of a sideways market.
What's your trade of the day, Mish?
Well, as a result of all of this, we've really been closely watching the long bonds. It's possible that short-term rates can continue to rise, but we may see more of an inversion with the long-term yields actually relaxing a bit. So if you look at the TLTs, they made a new low last week, and they had a divergence in momentum, which means the price went to a new low. When I say a new low, I mean a new like multi-month low, but yet the momentum did not go down as deep. So that tells me that there could be an interesting play to buy the TLTs, and we could see a rally back up to 115, maybe even 120. Of course, a lot of it depending on what happens with the Fed.
Thank you, as always.
Thank you.
Go to businessfirstam.com for where to see our show on TV.